afternoon and welcome to the Market Closing Show. This is our collab show between Business Today and India Today Television. I'm Sakshi Batra and this is the 3 p.m. show where we will get you all the market closing action. Straight away looking at how the stock markets are trading in trade. So 25,717. So we've given up the 25,800 mark. Remember, it's the last trading session of this week. This entire week we've actually seen constant selling pressure coming in on higher levels on the markets as well. 0.6% lower in trade. Now most of the sectors that were actually trading with gains for a large part of the session today have actually lost in momentum. Look at the metal stocks, they've lost the sheen. Private banks, financial services, pharma are also down. Now even autos, remember ahead of the auto sales numbers that will come in for the month of October tomorrow, that's also slipped lower. Remember, this is the month when we will see reflection of the festivities demand up to Diwali after the GST rate cuts coming in as well. But the auto stocks are also trending lower in trade. FMCG is down, the Nifty Bank is down, mid caps and small caps, that's the broader index, also has slipped into the red. Barring two sectors, rest all of the sectors have slipped. PSU Bank still holding up strong in trade, and oil and gas. These are the two sectors that are still holding up as well. But what's slipped among the stocks? Well, on the Nifty losers front, you have Eternal, that's the parent company of Zomato, that's down by 3.5% today. Max Healthcare Cipla from the Pharma and Healthcare pack, also down. NTPC, Grasim Industries, HDFC Life, also down in trade. So a variety of stocks from varied sectors trending lower. Let's look at the handful of the stocks. I think just about 8-10 stocks that are still holding up into the gains towards the last half an hour of trade. BEL continuing to move up. Remember, this is as a reaction to the earnings that have come in, 4% higher in trade. This was the stock that held on its ground right from the morning trade in anticipation of good earnings coming in, and now the reflection there. Eicher Motors, Shriram Finance, Larsen and Toubro. These are the other stocks that are also holding up in trade. Let's look at some of the Nifty 500 moves where actually some of the stocks are doing very well. Fineotex Chemicals, this was up in double digits, remember, in the morning half of trade. It's now up just about 5% odd. We're also looking at names like Naveen Fluorine, where 16% of move can actually be seen on this stock. Look at the names such as Intellect Design Arena. Again, results over there. Sharp improvement in the profitability has moved up. Intellect Design also in trade. Look at names like IDBI Bank, that's also pulling up. So all of these names are actually doing very well in the last half an hour of trade as well. But let's welcome our guest on board, Mr. G. Shokalingam, okay, so we will try to get to him very soon, but let's quickly look at what else is buzzing on the D Street today. Remember, viewers, it's the day when Lenskart IPO is clearly in focus, day one of the Lenskart IPO. And on day one, we have seen Lenskart IPO getting fully subscribed before 3 p.m. as well. This is also led by all the segments of the IPO. The retail segment getting fully subscribed. We're also looking at the QIB portion getting fully subscribed as well. And the employees quota also nearly fully subscribed as well. This is also the time when on the day of the IPO opening, we've seen the grey market premium also jump by about 17%. This is the unlisted market that usually reflects the mood of the markets, although this is an unregulated market. So you have to be very cautious when you apply looking at just the grey market trends right there, but speak to your fundamental experts. Remember, Lenskart IPO is the one that's been in the thick of a lot of debate over the last 1 week, talking about how the valuations are extremely expensive at this point in time. Everybody is saying that, the PE ratio, that's the price to earnings ratio, is 235, which actually means that the company is asking you to give it 235 rupees for every 1 rupee that it earns at this point. And that's why it's leading to this entire valuation debate as of now. 382 rupees to 402 rupees is the price band at which Lenskart IPO is open. But looking at the reaction that we've seen on day one, it's actually been pretty robust on day one. Very strong demand right from day one for Lenskart IPO of Piyush Bansal, and that's a big victory coming in. That despite all that debate, you have seen the confidence from all across the segments for Lenskart IPO. We will also be speaking to our guest on board on that as well. Let me also look at some of the other aspects that you should be definitely watching out with us as well. I think we are now looking at Mr. Mayuresh Joshi, who's joining in on the program with us, and also Mr. Shokalingam also trying to join in. He's the Okay, Mr. G. Shokalingam joining in is the founder and the MD of Economics Research, and Mr. Mayuresh Joshi also joining in on the program. Warm welcome to you, Mayuresh. Good to have you with us, and thank you so much for taking the time out for this conversation. Mayuresh, starting to talk about the Lenskart IPO, that's what I was just mentioning before you joined in. So much of debate has happened. It seems like everybody has become a PE guru over the last 1 week and talking about what exactly is happening there. For sure, 235 kind of rupee ask for a 1 rupee earning that Lenskart really has. What exactly is your thought, and what have you advised clients on Lenskart IPO? It's got fully subscribed on day one despite all that debate.
And therefore, I think the expectations are largely getting built out that platform business, which also has a significant operations coming in globally, might actually fare well. However, I think there is no room and cushion for valuation, Sakshi, as you pointed out. In fact, if you look at numbers and you knock the other income component out, that P becomes even more astounding. To that aspect, I think let's see how the listing probably happens, and then we'll probably take some.
Right. Mr. Mayuresh Joshi, could you also help us understand, when we look at the massive subscriptions, the massive fundraise we've seen. In fact, October has been 1 month where we've seen busiest of the IPO season. We've seen 46,000 odd crore rupees raised. This is the single 1 month, of course, led by, because we had Tata Capital, we had LG, now we have Lenskart. So many of these big ones coming in that have pushed up a single month's, IPO fundraise to the historic level as well. And now we're looking at November that also promises to be another one where we could be seeing many big names coming in as well. For all our India Today audiences who may be looking at IPOs and these new age companies who they see and deal with on a day-to-day basis, when they look at it, then they see a lot of promise that we are using these companies on a day-to-day basis. We understand these companies. What would you like to advise to them when it comes to IPOs, and how should one do that selection?
I think first, the area they're operating out of becomes extremely important. I think a lot of the platform companies which have probably got their IPOs have the inherent tailwind of both the digital aspect with them and building in operational efficiencies, because they can business models.
Okay, Mayuresh, I think we are just having some disturbance in your line. We'll just clean that up and come back straight away to you at this point in time, and on the IPO space as well. But so many of the earnings that are coming in, viewers, keep an eye out on the earnings season. Remember, earnings season has reached a crescendo, which actually means a lot of companies are reporting. This week alone, we have had 150 companies reporting their earnings. So the season is in thick action. Just recently, in the day, we have got Maruti Suzuki, the largest car maker of India, report its numbers. Profitability up by about 8% year on year to 3,349 odd crore rupees. Revenue that's up by 13% as well. So that's clearly, remember, in the focus. And this is one company that will also see just a slight reflection, not full reflection, but a slight reflection of last few days of September, reflecting in these earnings, talking about how the GST rate cuts have led to a demand. Of course, maximum part of that reflection will be seen in the Q3 results, but we've seen net profit up by 8%, revenue jump by 13%. Profit has actually been slightly below the street estimates, but the revenue is above the street estimates. We've also seen operationally that the growth has come in about 0.5% on the EBITDA level. Mr. Joshi, you were talking about your IPO space, so please continue that, and then we will come to the Maruti Suzuki earnings as well.
Yeah, the point I was saying is, technically, I think they should probably have a check within the list peer as well, because all these new age companies or new companies which come through, if there is a comparable peer who has done and has been in the market for the last 2 decades, I think there is something which these companies have done right, and therefore making a comparison with them is extremely crucial. Third, obviously, I think valuations play a very key role. I think if valuations are reasonably placed, there is a sense for investors to probably make some element of money. However, I think with the recent IPO push that we've seen, largely because of the missing out action, the markets have given one-way move with correcting right now, going way. But a lot of people have not participated in the market fully. And therefore, I think that feeling of missing out probably plays out. The FOMO probably plays out with investors rushing in to probably subscribe to these IPOs. But have a look in terms of how these IPOs have also fared over the last 2 years. I think a large part of their IPO market is also below its issue price. A few of them have done well. And therefore, the bottom line is when you do all these checks in place, including corporate governance, including the management checks through the draft hearing prospectus, you'll get a fair idea that very selectively you can probably enter the IPO.
Absolutely. Let's talk about the earnings. And Maruti Suzuki just came out with the earnings. Varesh, how are you looking at that one? And especially tomorrow, again, the auto sector will be in clear focus with the sales coming in for the month of October. That's when we are looking to understand, what kind of a bump up has GST, cuts really led to in terms of demand across the sectors and the segments of various auto companies. Tomorrow is when we will also see that entire Diwali week up move coming into. So Maruti Suzuki, first in Q2, and then the auto sector. How would you really assess it?
So for Maruti, decent numbers. I think what we are really expecting in terms of new launches, specifically when it comes to hybrids and the SUVs, is something that will guide the direction in terms of strategic volume growth over the next few quarters. Management and a lot of auto company management actually have alluded to the fact of a higher single-digit volume growth coming through. And therefore, I think in spite of competition and the GST will ensure that a lot of buyers flock to the auto market. The prospects for the auto industry look good, specifically over the next 2 quarters. After that, I think whether it's going to be a struggle as far as numbers are concerned is something to be. But I think we generally remain optimistic on Maruti and the auto industry.
Absolutely. Something interesting apart from autos is the entire tech space, and I'm going to come to you shortly on that, Mayuresh. But when we talk about the biggest buzzword of this year, it's all about artificial intelligence. And in a move to make AI more accessible to the Aam Aadmi, Reliance Jio has actually tied up with Google, and under the new partnership with Google, the Gemini AI Pro will be made available free to the Jio 5G users for 18 months. A price that usually comes in for the Gemini AI Pro is at 35,100 rupees per subscriber for 18 months. But in case you are a Reliance Jio 5G user, you stand to get this for free. Of course, the initial plan is to roll out this for the younger audiences and consumers of Reliance Jio from 18 to 25 age. And then it's the expectation that this will be rolled out to a wider audiences as well. And we are going to be listening in more on that front. We have Cyrus John Mutali, who's joining in, the editor of Emerging Tech of India today, to share with us what does this deal really mean with Google and Reliance Jio, and what can consumers of Reliance Jio really expect going forward? What are the kind of inclusions that this deal and this free offer will give access to? Cyrus. Could you unmute yourself, Cyrus? We couldn't hear you.
Hope I'm audible now.
Yes, please go ahead.
Great. So thanks, Sakshi. I think this is a great move coming in from both Google and Jio, considering that India is one of the largest consumers of AI tools and applications. We've seen how ChatGPT is trying to woo the Indian audience by giving certain free tools that come in the more premium segment to Indian users specifically. It kind of speaks volumes about how the whole Silicon Valley is serious about the Indian market. Now, this little partnership between Jio and Google also tells us that they want to capture a larger market, because understand that India is a younger audience. They're trying to gauge how the Indian market is reacting to AI tools, and they're trying to capture as much market as possible because the younger generation is using AI. And this age category between 18 to 25 is what Google is targeting in this specific case. But this also benefits Jio in a lot of way, because it is also trying to create its own AI portfolio in India, with Reliance Intelligence also coming into play. So all of the expertise that Google brings also helps Jio in a lot of way to garner a lot of consumers. And I think this is fantastic. 35,000 rupee worth of pro tools available for Indian audience to use is just an incredible announcement. I think it will benefit India, especially the younger audience, a lot.
Thanks, Iris, for that. Mayuresh, coming back to you, I wanted to ask you if you are yourself a Reliance Jio user and you are waiting for this entire free access to be opened up across the board for all users there. And two, if you could help us understand in the big AI race that Indian conglomerates are also entering into, could there be from tariff war on telecom now an AI price war also that begins there, and how are you assessing that?
Absolutely possible. No, I'm not a Jio user. My wife is though. However, I think the take here is that all these innovations that are probably happening in the ecosystem, and we ourselves at Markets with India are using a lot of agentic AI tools. We are exploring them on almost a daily basis to help our workload probably get easier. And therefore, I think this is fantastic in terms of consumer sentiment, consumer adaptability, and Indians as consumers are very, very adept to all these aspects put together. In fact, in the morning itself, I download the AdTi app, the Zoho app, which is an equivalent of WhatsApp.
Yes.
And we're trying to work something around it as well. So I think it's fantastic with the
Absolutely. But, I also wanted to understand, this new fiscal year or the new calendar year that actually begins in January will also begin the hope of Reliance Jio getting listed. First half of FY 27 is when we are expecting Reliance Jio to get listed. Right now, also we're getting on an everyday basis, Mayuresh, questions from across our viewers and investors as to which are the AI firms or companies that they should be looking forward to as a theme for the new long term as well. So should one really keep an eye on Reliance Jio, not just as a telecom giant, but also an AI player? And within this AI theme, how are you really already building up that portfolio for your clients too?
Well, we're trying to find out stories, but very few stories actually which are pure AI plays. And even within AI, I think the players which will do the application layer, I think those are going to be value or momentum winners going forward. So we are on the lookout. However, as far as your Jio question is concerned, I think the expectation largely is that the tech expertise that they probably built, they will get it onto the platform. And I think there will be a lot of innovation to get involved. In fact, the price hike for telecom players should be evident. We are still actually one of the top 5 lowest bucket countries where data prices are all-time lows in terms of consumption patterns. So there is every likelihood that those prices will keep on moving higher. We'll have to pay a little bit more. But I think it would be worth the effort with 5G, expectations of 6G coming through, and the data consumption patterns that we've seen. So yeah, Jio can be a proxy, but we are still on the lookout for pure AI plays, which are very, very few in our opinion.
Absolutely. But when we talk about artificial intelligence and these new disruptive technologies, how is that really impacting the traditional tech giants of India? Well, the first 10 months of the year have actually been excruciatingly bad for tech sector employees, with more than 2 lakh people losing their jobs. A report by Rational FX shows that the highest job losses in the US was seen, with India also on the second spot. More than 17,000 frontline techies have been fired in the country. We've also seen Ireland, Japan, Switzerland also follow next. In fact, a key driver of these job cuts is the rapid adoption of artificial intelligence and automation. We've seen Amazon, TCS, Accenture are just some of the big names who have let go of employees and in many cases replaced their jobs with AI chatbots, particularly in the areas of customer service, quality assurance, and data management as well. Overall, the tech layoffs have actually been led by Intel, Amazon, and Microsoft on a global footing, and TCS also on a homegrown footing along with Accenture globally as well. Now, while this top reason is AI and automation replacing human jobs faster than the new roles emerging, companies are also facing a skill mismatch as many employees lack the expertise in cloud, in AI, in analytics. There's also widespread cost cutting amid global economic uncertainties. Companies are also shedding excess capacity over hiring during the COVID as well. So we are going to be just trying to understand what this means for the entire tech space too. Mayuresh, you have been discussing with me on Business Today television for last entire 1 year that you would rather stay away from the IT space. And the entire year has actually turned out to be a washout year for IT sector. It's been one of the most underperforming sectors in terms of the stock market performance that we have seen. And the reason is clear. One, their mood is pretty somber. There is quite a lot of uncertainty among the companies. The management commentary that we've been seeing all these quarters have also been looming around uncertainty and not sure as to whether the demand will be back across in full bloom across the sectors. How are you still looking at the IT sector? We've seen some of the earnings already come in, but are things looking up at all? Is there any sign of a green shoot?
So you're absolutely right on all the points that you elucidated. And therefore, I think the more critical aspect here is going to be how are they becoming more competitive with global platform companies and global companies which are challenging them with AI models, AI tools as well, which is making life a lot more easier for their end user customers as well. And therefore, I think being a little bit more digitally adept is always going to help. We are a little bit late on that front, and therefore, I think a lot of IT companies will have to garner steam to probably ensure that they're back on track. At the same time, the point that you mentioned, upskilling of employees, is going to be extremely critical, and therefore I think it's going to be an added cost that comes through. What this basically means is how does this translate into pricing from the end customer perspective? And if pricing probably remains stagnant, earnings cannot be expected to grow at a compounded pace over the next few years. So therefore, I think still maintaining my neutral view on the argument.
Fair point. Let's look at the market closing then. It's 330, 25,732, 145 point of a loss is what we've had as far as the Nifty is concerned, viewers, and that's on a weak note. Let's also look at the Nifty Bank as well. That's also shut shop on a weak note as well, along with the private sector majors like ICICI, HDFC and Kotak, all in down in trade that have participated in this 0.4% of a decline that we've seen on the Nifty Bank in trade today at the day's low is what you are seeing at this point. Broader markets, mid and small caps have also lost ground. So across the major indices, it's been a weak close for the markets. Although the Nifty gainers include names like BEL, Shriram Finance that have actually pulled up in trade despite all this weakness. But on the downside, Max Healthcare, HDFC Life, Cipla, these are all the stocks, Eternal, M&M, Maruti Suzuki post the earnings. There is a softness across the board that we have actually seen. Bandhan Bank, remember, we'd marked out this stock right in the morning opening action, still closes with 8% losses. Swiggy closes with 2% losses. Remember, yesterday the company reported its earnings, a wider loss of upwards of 1,090 crores, and therefore you saw that weakness. But PSU banks, PNB, Canara Bank, SBI, these are the stocks that have managed to pull up, and so is the PSU banking index that has actually bucked the trend on the banking space in trade today. But let's actually come back to our conversation with Mayuresh and try and understand where exactly is the green shoot available, or where do you think valuation comfort still presents an opportunity for investors to participate, Mayuresh?
I think public sector banks, mid-cap PSU banks still offer that risk-reward component where valuations are still very reasonable and expectations of reasonable growth as far as earnings is concerned can still continue. So I think the whole host of these PSU mid-cap banks has given a very decent set of numbers, including the likes of the Bank of Maharashtra, Bank of Baroda. And therefore, I think these banks can definitely be kept on your radar. A few of the agri-related sectors can also be kept on the radar because I think the expectation here is that with good monsoons, that extended monsoons that we probably feel, I think that might lead to a very bountiful output. And therefore, agro-related companies, you mentioned tractors, I think a few of the stocks like VS Retailers as an example, might continue doing well, considering the Indian banks.
Absolutely. We do have some questions for you, Mayuresh, so we'll straight away jump onto that. From our viewers, Prabhat Sharma from Pune writes in, says, will the rally in PSU banks continue, or could you suggest any PSU banks for long term that I could invest in?
So as I said, I think we remain very, very optimistic. Bank of Maharashtra is something that we have added in our markets and portfolios as a disclaimer. The numbers have been exceptionally good and they've been consistent over the past few quarters. Our own sense is that with CASA deterioration behind, in fact, there was improvement in CASA quarter on quarter, NIMs looking stable, deposit growth should look far more healthier compared to the large private sector banks. And therefore, I think PSU should do well. I think Bank of Maharashtra is something that we continue liking and wanting.
Okay. The next question is from Shreya Chauhan from Jaipur, says, is it worth investing in Lenskart IPO? And between Lenskart and Studs IPO, which one would be better for the long term? An eyewear maker or a helmet maker? How would you look at the options there, Mayuresh?
I mean, you can consume both, but both IPOs probably look expensive.
Okay. The last question that we have for you from our viewers is from Charu Patra from Bhubaneswar. Says, after all the recent Q2 results that we have seen, are there also any defense stocks that are worth investing in? How would you look at some of the top performing ones there, Mayuresh?
No, so it's a secular play. I think you probably need to understand that you probably need to have a long-term view here, because these are long gestation contracts, which take typically 3 to 5 years for contracts to get executed. And therefore, if you have a medium-term view of that duration, I think defense stocks can make it to your portfolio kitty. Solar industries, Mazda on declines, probably have all these characteristics of rating rankings being very, very strong. Strong order books, they'll be able to execute well over the next few years. And therefore, earnings over the longer period of time should be consistently good.
Absolutely. Well, thank you so much, Mayuresh. Good to have you with us, address all those queries of our viewers, and of course, sharing your insights on the markets. Always a pleasure. Thank you so much for your time. All right, viewers, it's time to wrap up the Business Today show, but we leave you with shots of a chicken meal in a restaurant in Seoul in South Korea and how it has actually driven the stock prices. CEOs of two of Korea's largest corporations, Samsung and Hyundai, were seen having a meal at local fried chicken joint in Seoul with NVIDIA CEO Jensen Huang and hundreds of people swarmed the area. But that wasn't all. The meal drove up stock prices as well. While the local restaurant is itself not listed, its closest rival, Kyonchon, has actually seen its stock surge by 20%. Korean poultry processor Cherry Bro has surged by 30%, while Neuromecha, a company that makes chicken frying robots, also jumped by 20%.